Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. This segment is presented by Charles Schwab. I'm your host, Jill Malandrino, and joining us this afternoon, we have Chuck Fuller, Portfolio Manager at Nasdaq Dorsey Wright, as well as Sara Marshall, Senior Index Research Strategist at Nasdaq Global Indexes. We're here to discuss asset class rankings as U.S. equities retain the top spot. It's great to see the both of you, as always. Welcome back to Trade Talks. Chuck, the performance has just been pretty outstanding considering just some of the volatility we experienced in the earlier half of the year.
Yeah, it's really been a tale of two markets. Going into that April meltdown, it was not looking good, but obviously ever since then, the market has just really taken off. We've had basically 4 straight months of positive performance, and this is within a period that's typically weak for the market. Kind of basically after April until the end of October is typically seen as a seasonally weak period. But the market doesn't seem to care, right? So it just keeps going up. U.S. equities have retained their top ranking in our asset class rankings, as you mentioned earlier. And that's kind of usually where they hang out, for in bull markets. They're usually up around number one, occasionally number two. So not real surprising there. I think a lot of people right now that we talk to have questions on, whether or not this can last, right? Is it time for it to end, or is this, just the beginning? Right now we never make predictions like that, but for right now, I would say that, with things like breadth being at all-time highs and different things like that, we don't see anything on the horizon to suggest that there's anything that's going to stop this. Kind of reminds me of the rally that we saw after the COVID bottom, honestly, where things just took off. Everybody kind of thought that this can't possibly keep going up, and yet it did. And so we're seeing some similarities there that are interesting.
Yeah. Sara, let's talk about the NASDAQ 100 and the NASDAQ comp from a technical perspective. Of course, the NASDAQ composite being all of the NASDAQ listed companies on the exchange.
Yeah, so starting with the composite, again, all the stocks listed on the NASDAQ stock market, that pulled back from all-time highs on Wednesday. That remains on 7 consecutive buy signals with support that 20,600 and remains about 50% oversold. From here, a move to 22,600 would return that chart to a sell signal. That's a really strong looking chart. And then the NASDAQ 100, which is the top 100 non-financial names listed on the NASDAQ, experienced a pullback on Wednesday as well, to 23,000 after hitting a new intraday all-time highs on the 12th of August at 23,800. So the NASDAQ 100 index chart looks great. I believe this is a nice normal pullback, if you will. It's well above the positive trend line and remains on 4 consecutive point and figure buy signals that have occurred all since April.
I want to go back to international equities for a moment here, Chuck. Number 2 in the asset class ranking. I mean, it was leading from the beginning of the year, basically on the valuation story, but did move down to number 2. I believe it was last time we spoke in July or June that it switched spots with U.S. equities.
Right. Yeah, it moved down to number 2. I mean, really, but still, they're the best performing asset over the year. It came into the year, like you said, it was really doing well, but really it's still retained that edge. I think it's more like in line with the market now or with the S&P. But they're up like, something like 22% year to date versus 10 or 9 to 10 for the S&P. So it's really interesting. To me, it's mostly a story of the weak dollar. The dollar's been especially stocks. So we'll have to see if this is kind of purely U.S. dollar driven or if there's something else to it. Once the U.S. dollar is not going to keep falling forever. So occasionally, when we come back to having a strong dollar, if it can still, retain its strength, I think that'll be very interesting to see.
Yeah. And of course, with fixed income, do you think what's happening with the Fed and the market's anticipation of a rate cut, how much, if and when, do you think that's influencing some of the activity that you've seen within the asset class?
Yeah, I think, right now, especially over the last, I don't know, about 2 or 3 months, the yields have been mostly range bound. I think they don't necessarily know what to think. Certainly right now, well, I think with the jobs report that came out and all that kind of thing, the chances of a rate cut in September, went through the roof. It's, basically priced in. It's also interesting to see that, there's expecting a second cut possibly in October, maybe even three cuts by the end of the year. So that's all kind of leading to this case where it's like the yield curve is starting to renormalize after many years of not being normal, right? We've had the short-term rates above the longer-term rates for a while now. And that, if we can get the cuts, that'll kind of renormalize things, hopefully get things back in line. We've also seen some things there with like the MOVE index, which is kind of like the VIX for fixed income. Has been pretty interesting where it hit new lows that we haven't seen since 2021, just here recently. Which to me, that's a very good sign because just like when the VIX is up high for a long period of time, it's just tough, to be an equity investor. When the move is up high for a long period of time, it's tough to be a fixed income investor. So I think seeing, all these things starting to normalize is good for the market, but still in terms of our rankings, it's still very, very low. So definitely needs to see some more work out of it before it starts to move up.
Sara, let's talk about some sectors in particular. Let's start with technology. It's not surprising to see the AI index and the cybersecurity index hitting all-time highs. They kind of go hand in hand as the attack surfaces expand and emerging technologies open us up to new vulnerabilities. Certainly, the need for cybersecurity measures are there.
Absolutely. So I was looking at the chart of HAC, which follows the Nasdaq ISE Cybersecurity Select Index. Like you mentioned, that hit an all-time high where it has formed a double top, and now it has fallen to a sell signal. So that's a really interesting chart pattern. It's setting up for a potential shakeout pattern, which if it were to complete with a triple top buy signal, is a bullish pattern that is like literally shaking out weaker investors. So I think that's an interesting chart to watch. As well as you mentioned that the Nasdaq CTA Artificial Intelligence Index, that is another one that hit all-time highs and has since pulled back to the middle of the 10-week trading band, at 21% overbought. It remains on a point and figure buy signal. So a lot of these charts were, like I mentioned, hit all-time highs. Most have just pulled back and not moved to sell signals. But I really think that chart of HAC is one to watch there to see if it is able to, like I said, shake out those weaker investors right now. And we'll see if it's able to reverse back up and complete that triple top here over the next few weeks.
So what's also interesting too is the Smart Grid Infrastructure Index Fund and the Silver Miners Index are up because both of those clearly have industrial applications to support this growth of AI needs.
Absolutely. Yeah, the Grid ETF, which tracks the Nasdaq Clean Edge Smart Grid Infrastructure Index, all this AI power is, we need a stronger, smarter grid to support all that. And that fund or that index, excuse me, is sitting at all-time highs. And that fund score of grid, the ETF, is 5.69. So that is a really strong, that's 0 to 6, 6 being the best. That is a very solid fund score. And then, as you mentioned, the Nasdaq Junior Silver Miners Index, which is tracked by SILJ or SILJ, the ETF, that hit a multi-year high at 17 and has since pulled back to 1625. That remains on a buy signal, but it's up over 66% this year. That fund score is just keeps getting stronger, 5.73. That is one that I've watched closely. Again, that's looking at those companies that are involved in the silver mining, and again, the Nasdaq Junior Silver Miners Index, which is tracked by SILJ.
Yeah, those two will be interesting to follow for sure as the demand situation plays out for these emerging technologies. Appreciate both of your insights as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at